James, welcome back to Face.
Hey Dale, can you hear me?
Got you, buddy.
Good.
It's
Good to be back.
been, yeah, it's been a long time, way too long.
Yeah, it has
So
been a lot. A lot has happened. How long has it been? It's been like it feels like
I,
a year at least.
yeah, I think it is. And gosh,
Yeah,
we probably haven't spoken throughout the pandemic, and
sure.
gold made new all-time highs, and it's come off. And I know that you're a sound money guy, and
Hmm.
interested in where you think things are at economically. I know you're not just you look at everything, even though your wheelhouse is sound money, precious metals. What do
Hmm.
you think is happening here? We have a new president. There's a lot of saber rattling going on geopolitically right now, James.
Yep.
What worries you about the landscape we see here, the financial landscape?
Well, I mean, if we look back to the lows that came about in the commodity market, especially during the crash, during the COVID crash last March, I mean, if you look at the inflation, the price inflation in various things, I mean, obviously it's gone up, and Federal Reserves, they're telling you it's just simply transitory. And I suppose I worry that it may not be transitory. I mean, look, we look back at the monetary base, M0, which really started to blow out when the repo market in New York Fed intervened in September 2019. I
Oh
looked back
yeah,
at the data from there onwards to today. Last time they reported the M0, it's up 70%. So you're talking like 18 months, a year and a half. We've blown our monetary base up by 70%. And I know there's all these people who say, well, it's just stuck with the banks. It's not getting out there. There's not a lot of turnover. There's not a lot of velocity with the currency, et cetera, et cetera. But one day that may turn, and one day there will be velocity with the currency. And then where the hell are we then? I mean, it's to blow out your monetary base that large and not think that there's going to be repercussions for it. I think you're deluding yourself. And so it's in the short term, things can look and appear nominally as if everything's okay, but I think longer term, my spidey senses are up, and I'm guessing. Well, my thesis is still going to play out. They have to kill the dollar in order to nominally meet all the debt and promises we've not saved for. And that's the easiest way out historically for fading empires to go. And that's, I think, what we are.
okay. So what do you think? Technically, I put up the gold chart. Can you see it?
Yeah,
And,
yeah,
yeah. Okay.
yeah. I was
Go ahead.
looking at it. I was thinking this week. I mean, if gold wants to show that it's on a rebound and it's ready to start going, it's got to clear 1800, right? I mean, can it do it intra week? And I mean, can it close the week above 1800? Can we do that? I on a short term trade, I don't know. That's like a coin toss to me whether or not
Yeah.
it can
Okay.
do either one or the other. When I talk about gold or silver, I talk with a time span of
10 years.
like two years at least for good
Yeah.
performance, and 5 years for the thesis to really get rocketing and exponential, and 10 years for it to fully play out, and for everybody on the damn street to understand that he was right.
Okay. So can I assume that you're in the super cycle bull market that's going to take silver, to three figures?
I think so. I mean, three figures for silver is, I think, a gimme. I think you got to get beyond 50, obviously, because that's the ancient nominal high. That's, you name me something else in the commodity markets that's less than its record price in 1980. I mean, it's been a long time, right? It's been 41 years since it hit 50. I mean, it came close in 2011, but the all-time high was 1980. And yeah, Dale, I think we are walking into a commodity super cycle that'll probably peak out in the early 2030s, late 2020s.
Whoever
And
thought that lumber prices would top gold prices?
the fact that lumber is, it's literally grown,
1900?
it's
Yeah.
literally grown on trees, and
Yeah.
you have to go blast mountains and sift through rocks and tonnage to get silver. And the fact that the prices are pretty close, pretty interesting.
Yeah.
Look, it's one is money and one's not, and I think we're going into a situation where we're going to be questioning our money.
What do you think about gold silver ratio here, James?
Yeah,
We've
sure,
come
sure.
in quite a bit, and I'm going to put it up here because, it's been playing in this 68 level, and
Mhm.
I'm a little torn. When I look at this now, I thought we might get a breakout here and that it might correct. But,
Yeah.
this washout low down here had a confirmed low. and thinking that maybe there might be a continuation of silver outperforming gold. Which side of the fence are you on with this?
So I do a video every week for SD Boy, and there's a YouTube
Yeah,
channel that we do.
yeah.
And last week I had someone tweet me a really nice chart. It was a clean chart, about 11, 12 years of gold silver ratio. What it showed was, I think, the 50-week moving average and the 200-week moving average, and it showed a death cross essentially. Last time you saw a death cross like that was back in the run from 2008 to 2011, and we just had that death cross on this chart. And I tweeted it out. I put it in the last video on the YouTube channel, but it was a really clean chart. And what it showed is we're just crossing that. We're doing that death cross again, like we did in that last little bull run, and whether or not it can spike up and go to 70 in the short term, obviously I don't know that, but I think ultimately, it heads back toward the 2011 low ultimately in the next
40.
few years. So, no, 2011 low was 33. I think we hit 33 and we blow beyond that in the 20s, and it could get really stupid. I mean, look, if silver goes to $100, $200, $300, I mean, people who are into silver are absolutely manic about it anyway. And if you get a really performing well and they're able to brag about it, I mean, that's just going to get everybody piling into it, and it can get really stupid on the upside. So for as depressed and as terrible of an investment as it's been for, 4 or 5 decades, and I assume that it's been systematically suppressed for many reasons, I think it can get as stupid to the upside for a short stint.
You've been around long enough, James, to remember when platinum used to trade at a premium to gold, quite a premium.
Twice, 2 times.
Huh?
2 times, I think, in the early 2008, it was out of control how expensive it got.
Yeah. Do you think there could be kind of a reversion to the mean where platinum could play catch up?
I totally do. I think what we're dealing with right now is what we're headed toward is a monetary crisis, and that's why gold has been so firm and strong for so long versus, platinum is seen as more of a commodity, et cetera. But if you look back at like 1980, what was the last time we really had a peak scare in, the fiat currency, you saw all 4 major precious metals spike exponentially within 4 months of one another. And I assume that'll be the same case here. So
how old were you then?
I was, let's see, that was early.
It was 1979.
So I was 2 months old in the gold silver spike on January 21st, 1980.
Really? And was your pacifier gold?
Exactly.
Anyway,
I had a silver spoon in my hand.
Oh, there you go. Silver spoon. All right. So we got a lot of puns out of that one.
Sure.
Yeah, I remember that. And do you remember the high? Spike
high. The high was 850 in gold, January 21st, and silver was right near 50. And they were simultaneous. They came in and they said, no more longs in silver because we're going to scapegoat the Hunt brothers. I think everybody ran from those pits over to the platinum and palladium and built a exponential bull that happened a few months later.
What a memory you have for a 2-month-old. You remember all that. So basically, we're going to have a dollar crisis. I just have to say this, James. I've been hearing about this since the 70s.
Of course. So it's different though, Dale. I mean, the speed at which things are changing now with central bank digital currencies, the IMF SDR, the MSDR system that's supposed to supplant the treasury market. It's eventually, we're moving more toward a multipolar world where the U.S. dollar cannot be as dominant as it's been. We're not the largest economy anymore. It's just not the way it is. China's moving pretty fast. And
China's going to go to a digital yuan to try and upset hegemony of the dollar. How will that? What do you think of that?
So what they could do, and Kyle Bass was recently on CNBC talking about it. And it's true. They can go to their direct fiat yuan CBDC, and that basically bypasses any of their bank system. They can just do it directly with the People's Bank of China. And then the People's Bank of China can turn to any of their major trading partners and say, here's what you're going to use. And, like it or not, these are the terms. And so there'll be no more U.S. dollar issuance in between. There'll be no demand for the products. You're just going to use this CBDC in the yuan. And if you think about commodities in general, so many of them are like 50% are bought by China, right? So then all of a sudden it's like, Okay, well, so where's price discovery eventually going? Because, China's not going to put up with that in like 10, 20 years. I mean, the idea that the U.S. is going to dictate to them what the price of commodities is, I don't think that's going to work if they're going to continue buying at this clip. So this is probably step one in the process of kind of extricating the U.S. dollar, at least out of their trading. And then eventually at some point, they're going to have huge markets. I mean, silver, I assume price discovery's headed east by the 2030s. You have, Singapore, a major trading hub. You have a lot
wasn't
of,
wasn't that supposed to emancipate the price of gold and silver from the paper market? Because
there was always people who
Jim Sinclair.
They jumped the gun and they think it's happening tomorrow. This takes decades. I mean, it's a long run. But the one thing that is interesting is that you're using technology for the fiat yuan CBDC to make your trading partners use that and not use a US dollar or a euro. That's a big step. And if you start using an MSDR, that means that the United States dollar is no longer, the people are buying, treasuries, et cetera, but maybe they're going to buy an MSDR. And that means, US dollar is only like 40% of that, 35% of those types of debt instruments. And so you're basically pushing the dollar to the side. It's no longer 60, 70% of all transactions. It starts moving toward 40% of transactions, 30% of transactions. And that's a big difference, right?
So you think go ahead. No. I'm just wondering if you see anything, we have a new administration. President Biden didn't go as far as he could have with the Prince, Ben Salman, of the murder of the journalist. He just, there were no sanctions or anything. But I always read that a real important part of it being a reserve currency is oil being priced in dollars. So, people have been talking about, the death of oil. We don't need oil. We're going to have EVs. I think oil is going to be around for a while. In fact, the green energy people probably would love to see $120 oil again, because then it makes green energy and electric vehicles even more compelling. Do you think there's any risk now of the U.S. losing its petrocurrency status with Saudi Arabia?
So that came about in the 70s, right, when Kissinger went over there and made these deals, and it was basically, we'll give you guys protection in this bad neighborhood that you live in, so long as you agree to essentially funnel your profits through our debt instruments, and that really got it going. And you're also pricing your oil in our currency. I mean, that's a big argument why we invaded Iraq, because they were gonna use the euro instead. So I mean, the idea is, like, first of all, go look at who buys the most oil in the world, right? It's probably China, I'm sure. Yeah. I haven't looked at the data recently, but they are the largest economy, and they've been, if you've been paying attention, they've been kicking our ass for the last year or so in terms of how they're performing versus our economy. I would assume that they are, in the next 5, 10 years, 20 years, are going to be the largest economy. And it's even possible that the SDRs, that's eventually, I think, where we head in terms of the supranational currency and the trade. I think the headquarters is going to be in Beijing. Christine Lagarde's already on record, 2017, saying that. Before she was the European Central Bank head of central bank in Europe, she was in charge of the IMF. In 2017, she probably said, "I dream about having the headquarters of the IMF SDR, at the IMF in Beijing, China, by 2027." I mean, it's they plan on this for a long time, and they work on this for a long time. It's coming. I may sound like a raging lunatic. You may think, who's this jackass on this trading show? But these are the people in charge, and they say it publicly, and people just don't pay attention.
What's EM in front of SDR? We've heard SDR for years, but
I think it's market SDR. I believe that's what they're talking about. It's a private public. You can also what they want to create is a debt instrument that private institutions can buy into, right? So you can crowd out the U.S. Treasury market and start to bring in the MSDR, make it more of a multipolar, kumbaya debt instrument.
And when people talk about the Great Reset, this is what they're talking about, right?
I think people, when they talk about Great Reset, usually in marketing terms, is like shock and awe, overnight revaluation nonsense. I think this is more of like how the real world works in terms of
like a train wreck,
long-term planning. Eventually, when it's time to actually implement this, you're going to need some chaos. So they may come up with some fake chaos, and look. Let's be honest. I mean, I'm sure a lot of these commercial banks, if they were truly mark to market, are probably bankrupt. You could simply just bankrupt one of them, have a chain reaction, and say, "Oh, we're gonna have a meeting and come out with a new system." I mean, there's nothing that difficult about it, and a lot of times what you're being told on the news is not the truth. You have to look underneath to kind of figure out really what the truth is, and you have to do deeper digging.
I'm glad I have you on because, I've been receiving a lot of these emails, people that have been talking about blood on the streets forever, and they're right once in a while. And they're talking about some law that Nancy Pelosi just got through the House, and it has, they say, if you have more than $5,000 in your bank, that this is going to be important to you, and you could lose your savings and pension. Do you know what they're talking about? What kind of hype they're scaring people with?
It's so a lot of times
The
people
law?
will use there's a law called it's a bank bail-in law essentially. And
Oh,
the G20,
bail-ins.
the
Yeah,
G20
okay.
signed onto that in 2014, and the G20
Right.
obviously the top 20 economies in the world. And it's
Right.
this law that they all will hold hands if some massive commercial bank goes under, and they won't bail it out, they'll bail it in, and that means
Right, that your savings. Well, actually, don't people know? Probably most don't. That once you deposit your funds in a bank, it's their money.
Yeah, I don't think people understand that it's really an unsecured loan, and all you are is an unsecured creditor, and that means that you really are like the last line of getting any money back if there's any bankruptcies. The only the hope that people should hold on to, though, is if they have FDIC insurance and it's not huge systematically, like all the banks start failing.
Yeah.
If you're just one bank and you have under $250,000 in an account there, you should be backed up by the FDIC. It may take a long time to get your funds, but at the very least, you'll get something. Look, the bottom line is you better know who you're banking with. I wouldn't bank with any banks that trade in derivatives. I'd find a respectable credit institution in your local area that you can trust, that is not a gambling casino in the back of the.
Good point.
Yeah, that's the key.
So a lot of the credit unions are like that.
Yeah, the credit unions are safer. I mean, you got to do due diligence and look at the books of these companies and actually be shrewd about, your choices and do due diligence, because there are bad banks that do real estate loans in terrible markets, and the real estate's going to fail. So they may fail, right? But then if you look at the banking industry in general in the United States, over 50% is owned by the commercial. 50% of the market share is by the casino derivative trading banks, like the JP Morgans, the Wells Fargos, the U.S. Bank. Any of them that trade in derivatives, I would keep an arm's length in my business and in my my personal savings, etc. Because I think eventually they may have trouble in the derivatives market, and then who knows what's going on behind the scenes.
James, have you ever seen an environment, and it's going to include maybe a little comment about crypto, like I would ask you, would you rather have an ounce of silver or a dog coin? Doggy coin. And I was around in 2000. I know what a bubble is like, right. But even that was concentrated with anything that had .com after it. But now you have commodity prices, you have real estate prices, you have equity prices, you have crypto prices.
Right.
There's there is hardly anything that's not a bubble at this time.
You blow out the monetary base like we've done in the last 18 months or in the last few decades. You just go back and look at how ridiculous we've done, with these QEs, et cetera. Now it's infinite QE and stimulus forever. That's what happens. I mean, I would argue they've done a really good job of suppressing the most important bellwethers, like the canary in the coal mines. The gold price has been depressed, and the silver price has stayed pretty depressed. But ultimately, that'll revert, and those two will go apeshit, because when they're ready with their CBDC systems, which I think is what they're planning on, they want to have a fiat Federal Reserve note CBDC U.S. dollar that they're going to hand out to people and give them MMT or a monthly stipend or something like that to kind of get through the malaise of the economy and kind of to build equity and not have people riot in the streets because they can't afford the food prices. They need to have handouts, right? So that's what they're getting ready for, and it's just a question of when is that system in place, and then they can kind of really go pedal to the metal to devalue the fiat Fed note and the promises they never intended to keep in the first place. I mean, that's I'm cynical in that sense, but that's exactly what's going. I think, and it's just, you know, in the short term. Obviously, you guys are mostly trading on the short term, but I'm trying to give you a longer term perspective. Of
right. So let me ask you this about long term. You know, I claimed that when Modi went ahead and pulled a large denominated rupee in India, that it was kind of a, you know, a dress rehearsal for a so-called democracy to do that. What do you advise people that are sitting on a stash of $100 bills right now?
So first of all, it's not a bad idea to have a good amount of cash kind of squirreled away in the house in case there's ever a freeze in the financial system for a few months.
Yeah, the ATMs vis-a-vis Jim Rickards are empty.
Yeah. So having say having 3 to 6 months of household expense cash, you know, squirreled away somewhere in the house in $20 bills, I think would be the suggestion, not hundreds.
And to do that, recall the notes?
No, I don't think they'll recall them. I hope not. I mean, that's the Ken Rogoff argument that, you know, only drug dealers use $100 bill, whatever. I mean, I don't think they'll be able to do that. Maybe down the line they may try that, but and I'm just saying.
Well, they could use COVID for an excuse.
That's true.
They're using it now, right? I mean,
it's
true.
So
you know, that's what I mean. COVID's the excuse for everything, isn't it?
And also, Dale, you look at like Visa and MasterCard. Obviously, they're in on the game. They love it, and they incentivize small businesses to use their little quick payment options. Some of these businesses don't even accept cash. Like, so yes, that's where the system wants to go, is less cash. So you are right. I just think 20s in a financial crisis is easier to break, and that's just right. You don't want to walk into a grocery store with a C note. I do that sometimes here in Panama, and they look at me like, "Nah, you got 20." You know, like they want a smaller note. So. And that's just, and if you have a lot of cash sitting in short-term, you know, U.S. IOUs is not a bad idea. They're not going to default on those.
T-bills, 90-day bills. Yeah,
exactly. Like that's fine. You can sit in those. Those are safe. The U.S. government's not gonna, you know, default on that kind of thing. It's a lot safer, I would expect, to be that than in one of these, you know, derivative casinos that could eventually have real trouble. So. I think it's just knowing your counterparties and who are the most risky ones and who are the ones that are questionable, and staying away from the questionable ones.
Okay, so by the time we go to an SDR, and what do you figure, just a good guess, like maybe 5 years away?
Yeah, I think by 2025 this will be pretty damn obvious to everybody, and you know, it'll become. By that time, I would imagine we'll have gone through another major crisis financially, I would think, and that's where the SDR kind of comes out and springs aboard. And
where's gold at that time?
Well, gold, if you look at, you know, the monetary base and just history in general and how it performs, you know, I expect that it'll at least clear 40% of the monetary base. And in order to do that, that's a price of over $8,000 gold at today's, you know, U.S. fiat Fed note. So ultimately, that's like a four bagger in today's value, essentially. And silver, I expect. I mean, you got to play off the gold silver ratio from there, because, you know, gold is the leader. Gold's the mother of this thing. I assume it goes below 30. So let's just say it's 30, and, you know, you have $8,000 gold. Obviously, it's a couple $100 silver at least. So, yeah. That's my expectation.
All right. Well, you're stacking it there in Panama in the mountains, James. It was,
no, I keep it in other places, not here.
Okay. So would you consider gold like the $100 bill and silver the 20? So, I mean, if it comes down to that, you know, what kind of, how are you going to barter with 200, like every 1 ounce coin of silver?
I don't expect we're going to get in a situation like that, Dale. I don't think we're ever going to get in a situation where you're going to be running to your local Chevron and trying to pay with a silver eagle. I think what you're going to get is the situation where it's high inflation. Right. Maybe there'll be a crisis where they freeze things, but I don't think you're going to be running around bartering with silver. I think you're going to be using fiat Fed notes. Hopefully you have them in cash and you're not sitting in line to the ATM bitching. Right. So that's it. Just kind of be prepared for the worst. And if it doesn't have, then spend the cash slowly. It's not that big a deal. You know, you just basically plan ahead for the worst case scenarios and nothing crazy. I'm not talking about, you know, Armageddon or Mad Max scenario. I don't foresee that. I don't think that's happening unless an asteroid hits the Earth. Then, you know, then all bets are off.
What good is anything going to do for you there? Anyway, hey, James, newsflash. None of us are getting out of this alive.
Yeah, you got it.
Anyway, so enjoy your life, and you're a maverick. You you left the U.S. and in the mountains of Panama.
Yep.
I think about it every time I see you on Twitter, James, and I think about your knowledge base, and I think that people should consider getting a hold of you, and that you could be a great source of you know, do you help people if they call you and they
Oh,
say,
sure.
they want to buy from SD Bullion? I'm showing your Twitter
Yeah.
handle here.
So the
And
best way to get to know me is probably watch me on Twitter. Follow me there at James Henry
okay, yeah,
And
there you are.
if you're in the United States, that's who we service. If you're in the
Okay,
United States and you're interested in buying bullion, SD Bullion is the company that I work with. You could find as well the videos I do on YouTube. I
okay,
do them every week. So I think you'll find some, if you have interest in precious metals or precious metal related news and information, I think you'll find those interesting. If you thought any of the insights I had during this interview were insightful, or if you think I'm just a blowhard, at least you could go check it out further and think if and see the credible links and sources that I use. It's not just me speaking here. I'm actually speaking from what my research has shown. So,
and who's this? Your bodyguard?
oh, that's,
Where
you
my
know what that is.
cursors?
We didn't get into it today, but that's the silver squeeze. That's a new
Oh,
phenomenon that came about from the
new meme?
GameStop. Yeah,
Huh?
well,
Oh, okay.
it came out of the GameStop thing, and you have 60,000 kids on Reddit. Not kids, but
Yeah,
there's adults there too.
yeah,
And they're all totally in
yeah,
on silver, and they think that silver is a great bet for the decade. And so expect to
yeah.
see more news and information from
They did learn a
that crowd.
lesson, though, didn't they? That there's a difference between squeezing stock
Yeah.
and a global commodity market.
Well, the global commodity market, silver is a lot larger than a stock. That's true.
Yeah,
And
yeah,
silver did pop to 30 for a minute, but then the CFTC came in and tapped it down, as Rostin Bernstein said just in, I think, March 18th, 2021, in an interview. He
yeah.
literally said, we have tools for that, or we could keep the, things in line,
Okay.
et cetera, et cetera. So,
Yeah,
hey, you know
J.P.
what?
Morgan.
Ultimately, the kids know to take the bullion and to buy the PSLV. If you're going to get a closed-end fund, get one that actually backs it. So they
Yeah,
know the fundamentals. And look, Dale, this is a war. This is not just a battle. This is a long-term game.
yeah. Well, you got to win a few battles to win the war,
Not true.
thanks for coming in here and showing us your battle plan, James. And
I appreciate that.
I'm not surprised by it, but I wanted to get an update and see what you were thinking about what's going on in our world, and appreciate your insights. And you're a great hard money guy, and I appreciate you giving us some time today.
Oh, great, Dale. Let's do it in a half year, not a year next time.
Okay, I promise.
All right,
All
brother.
right, everyone. There's James Henry Anderson. There's his Twitter, and you can get a hold of him there. And I think everyone should have some physical close by. And that's a wrap for Turnaround Tuesday, everybody. Have a great trading day ahead. Looks like dollar is trying to bounce back here. And don't forget to join the team in 15 minutes for Morning Edge. Thanks again, James. Good
Yeah, thank you,
hunting,
Dale.
buddy. All
Cheers,
right,
brother.
that's a wrap, everyone. Remember, don't just count your coins, count your blessings. Adios.